Meditators, today you are going to benefit from a deep dive into identifying altcoin trends, our guest story of losing everything in the market to becoming a profitable trader, how he made his first $100,000, and an insight into the world of poker and how it crosses paths with trading. Sharing his knowledge with us today is Altcoin Sherpa. He is a popular crypto Twitter trader who transitioned over from the poker industry. After losing everything in 2018, Sherpa put in the time and studied to become a profitable trader. We can all learn from his experiences, especially those who have struggled with the current price action. If you want to help me with the current price action, remember to like and subscribe below. To stay one with the crypto markets, sign up and release 6 free market meditations newsletters a week. You'll find a link in the description below. A quick thanks to our partners Exodus and Nexo for making this podcast possible. There will be more on them later. Meditators, welcome to another episode of the Market Meditations podcast. This podcast was founded on bringing on members from the crypto Twitter community and giving them a voice, finding out who they are. And today we have a good friend of mine on, Altcoin Sherpa. Thank you so much for joining us, Sherpa.
Thank you for having me. I appreciate it.
Well, it's a pleasure to have you on. Can you start with a quick background about yourself, how you got involved in this space and got into crypto?
Yeah, absolutely. So I got into crypto around 2016. I was working in the online poker industry, like from a business standpoint, and we were having issues moving money internationally, as like anybody who's done international money transfers knows. Like the third party groups are very, very expensive. So Bitcoin became like a natural way to send money in 2016. I didn't really mess around with crypto all that much. I mean, I kept Bitcoin just because it was useful to transfer to other people. And I would say like late 2016 is when I started to get a lot more interested into it and like reading a lot more about crypto fundamentals. 2017, obviously, like that's when I started to like buy my first altcoin. I think Ripple was my first one. And I didn't know what I was doing at all. I bought Ethereum pretty low, like in this low 2 digits, I think, or high 1 digit, and rode the wave up in March of 2017, and that was really fun to see. Rode the wave all the way up in 2017 with the bull market, and like lost nearly all my money in 2018 for a lot of reasons. I wanted to learn how to trade, and obviously trading in 2018 with buying every dip that just kept dipping harder resulted in me losing like most of my money. So I decided around 2018, like, I was trying to learn how to trade, but that's when I really wanted to start to learn is 2018, 2019, and really 2020 is really, I learned quite a bit on trading just to protect myself from the volatility of the market. I realized that like having a quote unquote portfolio in crypto altcoins is like not the way to go in a bear market. Diversity like doesn't matter. And we can talk more about that later. But yeah, became a retail trader and really was just focused on trying to learn how to trade. I joined Twitter. I was really just a lurker all throughout 2017 and didn't really ever post. But in late 2018, I think is when I started to post a lot more. And really, I was just trying to find a community and some friends and free education. And I really found that in Twitter and was able to find a lot of friends and find a community and find a lot of education. So here we are today.
Well, what a journey coming in 2017, riding the crazy roller coaster, losing it all. It sounds like not in 2017 and the end of that, but mostly in 2018. And I'm definitely going to dive back into the specifics of what happened there and how you managed to turn it around and learn how to trade, or what you were doing even before that. But we've been doing this new segment on the show recently where we're asking guests how they made their first 100K in the markets. So, Sherpa, if you don't mind, I'd like to start by asking you to describe your journey to making your first 100K in the markets.
My first 100,000 wasn't really. It's not really a great story. It's just like I got in early, like the end. You know, any early-ish Bitcoin person or somebody that bought Ethereum early, like made a lot of money. But in terms of like making it skillfully, if that's if that's like kind of the way you want to go about it, which is like probably more valuable for your audience. Uh, for me, it was recognizing market cycles like on a macro scale. So I really became obsessed with like looking at Bitcoin dominance chart, which was really important back in 2018 and 2019. Maybe not so much now, given the total dilution of like how many altcoins there are in the market. But uh, I would go through perpetual cycles where I would like make lots and lots of money all throughout the winters of 2017, 2018, 2019, and then like I would lose it back in the summers. But my first 100,000 really was me being able to buy a lot of altcoins all throughout like the fall of each year, and then selling in the spring of like the following year. So like that was like the way in which I made my money, was just buying a lot of altcoins in alt BTC pairs, because futures weren't really available back then. But uh I would say recognizing my first like recognizing like the macro market cycles was really like kind of like the key for me. And I would also say my first real setup that I could actually replicate too. Like for me personally, it was uh, the Fibonacci like retrace. That was like one that a setup that I really loved, and that was a setup that really worked well for me. So being able to like recognize that setup was something that really helped my trading personally, because I could replicate it over and over. And that like that's I think the best part of finding a good trade or setup that you like, is being able to like make it mechanical.
So you initially made it just riding the right wave at the right time. And then, secondly, what you used was the Bitcoin dominance chart to identify when it was a good buying opportunity for altcoins, bought at that right time, and then managed to ride the wave up in the most recent parabolic trend that crypto's seen. So, how did you identify that it was the right time to buy Bitcoin or buy altcoins based on the chart?
Well, I mean, I think it was just going through cycle to cycle, really, just like having experience and seeing that like December is traditionally like a pretty good time. Around that time, December to January is like a pretty good time for altcoins. So I could accumulate a lot in the fall, and I think just really looking at the Bitcoin dominance chart was really helpful for me, because I mean in 2019 altcoins really just died, especially with the alt BTC pairs, and 2018 of course too. But um, I mean, I lost tons of money in 2018, and like really that was just like a training ground thing. But I'd say 2019 is really when I started to have a lot more success, even with altcoins dumping quite a bit. But Bitcoin dominance chart, in terms of, obviously, for those who don't know, Bitcoin dominance is just like Bitcoin's market share relative to the rest of the market cap. When Bitcoin dominance goes up, it's usually bad for alt BTC pairs. And when Bitcoin dominance goes down, it's very good for alt BTC pairs. And because I traded a lot in alt BTC pairs, it's I would just basically ride the trend. When Bitcoin dominance, and it's debatable if you can actually even chart these like big like kind of macro charts to begin with. But like I found them useful before, personally.
Well, the strategy seems to have worked. I'd like to follow up with two questions. One, are you using the Bitcoin dominance chart right now to determine the right entry point for alts? We're seeing a crash all over the market. And secondly, do you think as the market matures and changes, there'll be more factors at play, more things determining whether or not it's the right time to buy altcoins besides BTC dominance chart?
For the question number one, does Bitcoin dominance matter? I mean, I think it matters to a slight degree, but it's, in my opinion, not nearly as important as it used to be. Just given like how many more altcoins there are relative to the market, how it used to be. Like, you added a lot more Uniswap tokens and a lot more just there's like a lot of just random tokens now that are out there on the market. I mean, obviously anybody could have made tokens before, but they didn't really have a great way of trading it back in 2018. But now because we have the infrastructure with Uniswap, like, these different tokens are all like they're all over the place. So to answer your question, I don't really think the Bitcoin dominance chart is as important as it used to be. I don't really look at it as much. However, it can still be like a good macro indicator. If you looked at it recently, you could see that it was like getting close to quote unquote support, and hence like altcoins were probably going to be risk off. But again, it's debatable. To your second question, if like how I can time like the altcoin market, well, it really depends, because the fall of 2020 was pretty surprising to me in the sense that Bitcoin dominance rose quite a bit, and uh, alt USD pairs like fell quite a bit despite Bitcoin going up. That was kind of like a new paradigm for me, because in 2018 and 2019, uh, Bitcoin was going down. Well, I mean, in 2019, of course, Bitcoin went up for the first half of the year, but then the second half, it just like kept dropping, and alt USD pairs dropped as well. So for me personally, I was used to an environment where alt USD would always go up with Bitcoin going up. But as fall 2020 showed, alt USD, for the most part, many of them like fell and retraced quite a bit, and Bitcoin was skyrocketing. So, and this is the fall of 2020. So for me, that was like a good learning lesson. And like even this recent past dump was like a good learning lesson too. And we can talk more about that later as well. But in terms of like identifying trends for when altcoins are good, I mean, for me, I think at this point, I'm just going to start like using TA. I learned a lot with this recent dump on what accumulation versus distribution looks like. Like accumulation is like smaller bodies, low volatility, low volume, like not a whole lot going on. And whereas we saw this distribution, we saw a range the last few months, but like there was quite a bit of volatility, like quite a bit of volume, and it was really just distribution. So like, I think I got caught up in the market in that regard. But in terms of your question of identifying altcoin trends, yeah, I still think that like December was like a good time in general, traditionally, to buy altcoins, or at least like see altcoins start to move. But I'm just using TA from here on out, like individually, coin by coin, and you can also tell like by market sentiment as well. Like when everything's starting to die, that's maybe when it's time to like start scaling in.
Yeah, for sure. The sentiment, it's one of the best uses of Twitter, actually monitoring people's sentiment. I mean, accounts even do polls. You can get exact percentages. Not to say that everyone answers them accurately, but over a long enough time, you start comparing them and seeing how people behave with regards to it. Peak bull market, you ask people what percentage of their portfolio is in altcoins, and it blows my mind. Outside of the top 5 coins, people tend to hold 90% of their portfolio there, which just is how that irrational exuberance comes about. So picture a scenario where you've lost everything, Sherpa, and you have to start from zero again. And trading the current crypto markets, what would be your strategy to make that first 100K again?
Oh, geez, that would be really difficult, honestly. In these current trading conditions, it would be tough because it's very choppy right now in the short term. To answer your question, I mean, well, I guess first, like we can talk about if trading is even like for everybody, and the answer is no, it's not. So like 90% plus of people probably shouldn't be trading like actively, uh, whether for psychological reasons, emotional reasons, like financial reasons. Like I don't think trading is for everybody. So, you know, if you are a person on Twitter, like, and you see all these big numbers and P&Ls from like top traders, and you say, oh, like I really want that, just know that it's A, very hard to get to that point. B, you're probably going to fail. And C, if you're just doing it for the money only, you're not going to make it. You have to trade because you actually enjoy it, and you have to really like staring at charts all the time. You can't view it as like a job or something that you have an obligation to do or learn just because you want money. You have to really enjoy like doing and learning everything about trading, in my opinion. So there's that. Like first identify if you want to be a trader, and if not, that's like totally fine. You can be an investor. You can like learn fundamental analysis. Like there's tons of people that find gems on BSC and just like flip BSC coins, you know, and just there's other guys that like farm all day and just like jump from farm to farm to farm and like make tons of money that way. I would say just like finding your edge in whatever that is in crypto is like the most important thing. Be it, you know, trading, farming, flipping shit coins. You know, there's like, yeah, there's tons of different ways to make money in crypto. But
would that be a first step? Looking and trying to find whatever your edge is going to be to making that 100K. But in your case, you might already know that edge and which path you're most suited to pursue.
Yeah, 100%. I would say like number one, find your edge, whatever that might be. Like, and it's whatever you're interested in most. Like, you know, if you're just in it for crypto just for like money reasons, like that's totally fine. But it's going to be hard to like find that specific thing that you like to do. So yeah, I would say find what you like to do first. Identify that. Don't try to be something that you're not, and like try to force it. So for me personally, I guess with $100, I mean, honestly, I would probably, if I'm just like a, you know, random person on Twitter and like wants to know how, well, okay. So like the question too is do you want that $100,000 fast, or you want it like sustainable? Because if you want it sustainable, then I would just go to the grind and start. I mean, honestly, if you're starting from nothing, I would say that trading is very hard to do for a lot of reasons, because building your stack from like very small amount of money is tough given trading fees and everything else. I would almost say like if you're starting with very little, it's better just to like save your money at first and like wait till you have like a okay amount. I don't know, like $5,000 or something like that, and then like maybe start to trade with a little bit, not nearly like the entire stack, but just like have enough. But if you like want the fast money, I would say just flipping BSC shit coins is probably like higher EV for a lot of people, to be frank and honest with you. But yeah, like starting from like pretty much zero, I would say like building a role first before starting to trade is important, because if you just have like $100 or, you know, $500, there's nothing wrong with trying to trade with it. It's very hard. Like your risk of ruin is going to be very big. Trading fees will eat you up. Especially another issue with these small amounts too is that people see these big P&Ls on Twitter and like they'll just like over leverage themselves and get liquidated. So to answer your question, I would probably try just to build my stack up in real life money and get a second job, or, you know, just build that up with crypto. Like there's plenty of ways to make money in crypto too. Like you can market for people, you can like help out in Discords, you can, you know, there's a lot of different ways you can make money with airdrops too. Like if you're on the hunt that way, like there's just a lot of ways you can make money in crypto. Just have to like go and find it. And then I would from there I would build, I would use whatever edge that I thought I had, be it in trading or farming or wherever.
Nice. And so you'd look for $5,000, and that'd be roughly when you'd start entering the markets again. Before that, you just don't think it's worth people's time, except if they were just paper trading or learning and practicing while working that other job.
Yeah, pretty much. I mean, there's nothing wrong with trying it, of course. I just think that, and I'm not saying you have to like go with big positions, of course. Like you know, if you have that 5,000, like trade, you know, set a really tight stop and everything like that. But because the first part, like the bottom line is that when you first start trading, you're probably just going to lose, and that's like something you have to accept. It might be like, unless you're just like some giga brain that was just like easy for you. Like as a retail trader, you're probably going to struggle quite a bit at first. So.
Well, you said you personally in 2017 lost, and 2018. Only in 2019 did you start learning how to stop losing and start winning.
Yeah, that's
so
right.
Another two-part question: why were you losing back then? What were you doing wrong? And I'll come to the second part after you answer that.
The market was just going up, so like, you know, you're so smart when like your shitcoin goes up like 200%, like, or, you know, even higher. And then 2018 is when the market started to dump, and that's when I wanted to learn how to trade, because I was like, hey, I need to protect myself from this market volatility. So learning some technical analysis would like help quite a bit.
How much did you lose before coming to that conclusion, percentage wise?
I probably lost like 40% or something like that.
Okay, so not as bad as it could have been.
No, but then I proceeded to lose more. So as I learned how to trade. So yeah, I mean, I lost like a lot more. So 40% is like when I came to the conclusion that I needed to start taking this more seriously. And then like I kept hemorrhaging money as I quote unquote learned how to trade.
Hemorrhaging money. That's a great phrase. I'm going to
The
start using
only
that.
way that I stayed in the game was because I was early in 2016. That's the only way. Like I would have been washed 100 times over if I wasn't early. Like I was able to ride up 2017 from like a decent stack from 2016. So like that's the only reason why I was able to stay in the game. Like it's just pure luck, honestly. I would have lost everything if I had like gotten in at the top at 2017 or something like that. I mean, what was I doing wrong? You name it. I was doing everything wrong. For one, I had a quote unquote portfolio of altcoins, which is terrible to do in the bear market. I mean, just like absolutely terrible because I mean, as you guys can see, the last last month and a half or 2 months or whatever, altcoins have like pretty much all sold off. It doesn't matter if your project is Solana or if it's some Uniswap shitcoin. It's just like it's died.
See, the problem is you can see it now. You can see this now, and in hindsight, it looks so obvious. But during the pinnacle of the euphoria, everyone's like, you were describing yourself as in 2017. I'm a genius. These bears don't know anything. This time is different. And as people with influence, I haven't managed to find a reliable way to actually communicate to someone that this is going to crash. You're probably going to lose your money if you're playing this game with the wrong attitude, the wrong practices. How would you go back to yourself and communicate that in a way that you would have listened, or do you just have to take the loss?
I think you have to take the loss. And like, I'll be honest too, I was completely off sides with this recent move, and we can talk more about that later as well. But I was off sides for like a lot of reasons. But for one, like what I did wrong before was I had like a portfolio of altcoins that all just collectively dumped. And it's not like traditional finance where you just like have a diversified portfolio where you can like hedge your risk, and usually if one coin's dumping, or not coin, but one stock is dumping, like the other stock is pumping. So it's like you're never really going to be totally down. But I mean, crypto is so correlated in general that when the altcoin market dumps, it's like just collectively dumps. So I would say having a portfolio of altcoins like during bad times, it doesn't really save you at all for diversification purposes. And what else was I doing wrong? I mean, I was learning how to trade. Like I think trading in a bear market, in a choppy bear market, was just really a hard thing for me to do because I was so used to being up only, and to a degree, like I still trade much better in bullish market conditions. Like I still struggle in very choppy conditions in that regard, but just trading in a bear market was difficult for me because like when I'm reading all these techniques and trading tips and stuff like that, like I was so used to learning in a bull market in 2017, and then 2018 was just like a big shock to me. But and as to what you said before, how do you communicate like when the top is in? Like it's hard because you set your plan, and then when things actually start to pump, like you have to execute your plan. It's like what Mike Tyson says, everybody has a plan until they get punched in the face. Well, for here, you set your plan ahead of time, and things can get very tough when you get emotional. You start to see all these unrealized profits and gains. You start to think like the moon is coming, and I would say like a best strategy in general is like just always scale out. Like scale in and scale out is like a good strategy in bullish market conditions. Mainly because scaling out will always secure profit, and always having some tiny exposure, even like a moon bag, will also enable you to let profits run, and B, not give you too much FOMO when like the market continues to pump. So like that's something I would say for like when things are going like really, really crazy up. But I mean, as I said, like I played this the last moved down like pretty poorly. And I can go more into that if you want to.
We'll definitely dive into that. I want to comment on a few things you said, which I think is important to highlight. I completely agree with you on a diversified portfolio of altcoins. When it comes to altcoins, one, like you said, they're extremely correlated. Also, we're looking for outliers to outperform the whole market. When you diversify assets where you're looking for outliers, you by definition remove outliers and make performance match. So on a lot of levels, it doesn't make much sense to do so. One of the biggest problems in the crypto industry right now is that there are far too many applications and none of them are very user-friendly for beginners. That's why we've partnered with Exodus. They're a desktop and mobile wallet that allow users to own their own private keys, navigate a very easy interface where they can view their portfolio, store multiple different cryptocurrencies, as well as exchange and earn interest on those cryptocurrencies. So if you're interested in checking them out, head over to exodus.com. That's EXODUS.com. As the crypto industry continues to mature, it's natural that more and more wealth building platforms will arise. The problem with many of these, however, is that they are often so complex that it disincentivizes people from using them. This is why I've partnered with Nexo, one of the top crypto lending platforms in the world. With over 1.5 million users and 15 billion assets under management, Nexo combines the yield earning features of crypto with the familiarity and ease of centralized finance. Nexo allows you to earn interest at a competitive rate on crypto and fiat. They also allow you to take out loans using crypto as collateral so that you have access to cash without needing to sell your investment. You can even trade directly on the web platform and mobile app in an intuitive and secure way. If you're looking to embark on the journey to financial freedom whilst minimizing time and frustration, I highly recommend you check them out by visiting nexo.io. That's nexo.io. Before we dive into your recent loss and poor handling of the current market conditions, what changed? So you said you learned to trade. What things did you learn? What are the important things that took you from gambler losing all his money to more sophisticated retail trader who navigated this current bull market pretty well?
I would say just trading quite a bit. Like experience and reflecting on your mistakes like helped quite a bit. There were a few market structure, like not like trading market structure, but just like introducing perpetual futures for a lot of altcoins with FTX was like pretty cool to see. That like helped me a lot because I used to just trade in alt BTC pairs before, and the problem with alt BTC pairs is that like there's sometimes like not that much trading volume for a lot of the stuff that you want to do, and so being able to trade some of the futures was really nice for me to learn personally. Secondly, I would say learning actual setups in the sense that having setups that are that can be replicated and can be mimicked and can be repeated was really important for me. Just because before I was saying, oh, this is support, why won't it bounce? But in reality, like my support area that I drew was just like not correct. And so just a lot of work with regards to seeing what works and what doesn't work for whatever your trading system is. I mean, like there's thousands of ways you can trade, and whatever works for you personally. Like it's just finding, I would say finding setups that you can replicate helped a lot. Risk management helped me a lot personally in the sense that I wasn't just like going all in on like, one or two trades and like dealing with huge losses.
How mathematical were you with your risk management? Was it strict percentage levels of stop loss, or was it still more discretionary?
I would say before it was discretionary, then it turned into strict level, and then now it's more discretionary as I gained more experience. But I still have faults. Like the problem with discretionary is that like you let emotion take control a lot of the time. Even like in like the same thing with like when the market's going like absolutely nuts in terms of going up, like same thing, you like take out your profit targets and just like let shit ride when you shouldn't sometimes. So I would say, yeah, at first it was discretionary when I had no idea what I was doing. Then I turned to pretty strict, tight stop losses. And to be clear, like, like my percentage drawdown was like always like pretty risk managed, and it still is. Like I'll never, risk like 10% of my entire stack on like a trade or anything like that. Like nothing like that. Like, and I've always been pretty good about that, I would say. Um, that's another thing that enabled me to stay in the game, was that I actually didn't even trade margin uh, for a really long time. Like most people just like go straight to trading, like, with leverage, but I didn't really trade a ton on BitMEX, like when I was first trying to learn, because I said I just like to trade altcoins, and like alt BTC pairs were like the ones I traded. And so I think that's another thing that enabled me to stay in the game too, was I wasn't really introduced to leverage like early on. Like, I mean, I knew what it was, but I was too scared to hop in because I knew myself and like kind of inner degenerate. So I wanted to like stay away from it, because I knew if I'd done it too early, I probably would have not had a good time.
So you develop these skills, and as far as I know, this bull run, whether it's over or not, though it seems quite dire right now, went pretty well for you. What was the recent move which wasn't managed too well? What happened there?
So I was completely offsides for two reasons. Number one, I thought that Bitcoin was about to enter a relatively choppy period, meaning like I thought like 40K was like the bottom, or like 45K or whatever. So I expected altcoins to actually flourish in this kind of spring summer period. And there's a few reasons for that. The charts, like, they didn't look like absolute distribution to me. In hindsight, of course they were. Like, we saw that massive nuke, but like to me, they still looked like they were ranging. And there were some charts like YFI that looked like it was just consolidating, and it like looked like it was getting ready for a big move. And so after we had that big run in January, and many alts pulled back quite a bit from that point, and then kind of entered this like consolidation period, I was like, okay, like, they're consolidating. This doesn't look like a complete bear market for altcoins, similar to fall of 2020. I think they're going to have like a second run. And so I was positioning myself where I sold a lot of my altcoins before, when they were consolidating, or I'm sorry, like when they were peaked out in like February. And then I started to buy a lot more in March and April, expecting another move up. And to my surprise, Bitcoin moved farther down than I thought it would have. Like, I didn't think it was going to hit 30K. Like, I did have some suspicions that Bitcoin was on a distribution phase, just because of the way the weekly candles were closing. But I think that my emotions got a hold of me, and I thought like, hey, like, this is like, I could see this being accumulation, even though like it probably was not. So number one, I thought altcoins were going to go up in like this spring summer period right now, because like they weren't fully in distribution mode. And B, I was expecting, if altcoins were going to be going down, they would go down more like how we saw in fall 2020, where it was just like a slow grind down. I didn't expect like a massive like 50% nuke. Um, I was just like, so I was offsides for two reasons. Number one, I thought that they were going to moon, and instead they doomed. And number two, I expected a slow grind down, where it's much more forgiving to get out of your positions at that point than otherwise. So instead, like, I had to take like a much bigger loss than I expected, given the nuke. And that's kind of like, it's just like another learning experience for me. And like, it's something that I'll remember going forward, to be more in cash. Like, and I definitely like that's one thing I was proud of myself for, being was in 40% cash portfolio wise. But I wasn't one of those guys like some of my friends were like in like 80 or 90% plus cash, like because they thought the market was overheated. Like, props to them. Like they were definitely like right in that regard. So I definitely did not play it as well as I could have or should have, but a good learning experience for me.
Well, what would you do different next time? So, even would you have a tighter stop loss? Would you try to read the market better? Is there a specific actionable insight you're taking away from this?
It's hard to say because like I learned a lot more on the macro sense. I looked back and I said, okay, like you know what accumulation is, like you know what accumulation looks like, but I was blinded by my emotions because like even though price was in a like big range over the last like March April period, like it still wasn't really didn't really look like accumulation. But again, I was like emotional and I was just like offsides in that regard. So in terms of what I would do differently, um, I wouldn't honestly say that I would change a whole lot in the sense that because like my conviction in the fall of 2020, like late winter or early winter, was what enabled me to make a lot this cycle. Was just like piling a lot of money into altcoins, and I was like right with that idea. And I'm still up like a decent amount relative to my net worth in 2020. So like I did have conviction even with the second run, even if I was wrong. Like it was a good learning experience. I would say for me, learning from a technical standpoint on what accumulation versus distribution is, and like really checking myself. And um, I would say having less diversification in some other coins like Uniswap coins and like some of the riskier coins is like a better idea too of what I could have done better, like when the market was kind of peaking. But yeah, in terms of like what I could do differently, there's like honestly other than like the things like the hindsight answers, like be more in cash, take more profits, like obviously I could say that, but like it's always harder to do in practice.
Yeah, well, better reading of accumulation, recognizing the emotions better, maybe a bit more time working out, meditating, good stuff like that during peak euphoria. Sherpa, I'd like to switch gears a bit now. I know you have a background working in the poker industry. And I mean, poker is something I've been exploring recently. Well, thinking of getting into simply as a means of training my brain after I found out that I believe it's at Bridgewater, Ray Dalio's firm, where they require or give the option to employees to play poker because they think it's that beneficial to teaching someone how to trade. Uh, what's your experience like from the poker industry?
Yeah, I mean, I used to play and I was working in the industry for a really long time. I think it's a really good comparison or correlation or whatever you want to call it to trading for like a lot of reasons. We're working with incomplete information in both games. I mean, trading is a game at the heart of it for a lot of people. Working with incomplete information, you work with risk management, you work with game theory, you work with having good ideas, but knowing that like they like you're working with like just percentage. Uh, you're working with percentages in terms of like your ideas and conviction, and like it's just like it's a lot of comparisons in terms of poker and trading, and also like bet sizing too. Like do you want to go all in on a trade? Do you want to go on and on a bet size in poker? Like there's just a lot of similarities.
Would you recommend people who want to become better traders to spend time playing and learning poker?
Yeah, I think that there's a lot of good things that you can get from the poker table. I mean, it'll allow you to also feel your emotions too, like real time. Getting sucked out on the river is like not a really good feeling, and like how you respond to that is pretty comparable to like losing like 4 trades in a row or something like that. I would say or just like being underwater too, like being stuck like lots of money. There's like every poker player can remember their worst days ever, and like definitely not as much. Like the ratio between your good days and your bad days, like people feel way worse on their bad days than they do like relative to their good days. Like I think there's a
How
lot of
much of
psychology behind
poker
that
is
too.
how much of poker is emotional and psychological versus mathematical and calculated?
I mean, if you play online, it's like all technical. I would say. I wouldn't say all technical. I would say that uh, from a skill standpoint, you could just like grind solvers all day, and there's a lot of different solvers these days, which is different from when I played.
What's a solver?
A solver is like where you can input like hand ranges, and it will give you like a pseudo GTO strategy on like the right quote unquote play that you should do, or what you should like do in terms of ranges, like your check, bet, raise, whatever. But anyways, to answer your question, I would actually say that poker is actually really emotional in terms of being a sustainable good player for a long time. Like having control of your emotions and risk management is like really huge, because I saw like dozens or hundreds of poker players over the years that like had all the talent in the world, and then they would just like blow themselves up from tilting. So yeah, it's like it's a really important part. It's like similar to trading.
Yeah, well, it's motivated me to get a little bit more into poker and actually pull the trigger with that one, because it sounds like a lot of fun, especially the in-person version versus online, just to really get to grips with the psychological side of it, feel losing that money not as a number on the computer screen, but actually see the chips leave from in front of you. It sounds like a great experience, at least to try.
You should definitely try it out and just see what you feel. And like, yeah, if you have like some basic understanding, I definitely encourage you to like go to the casino and play a few hands if you want that experience and to see what real emotion is like, I guess.
Well, I actually don't have much experience at all outside of a few fun games. What would you recommend the best path to learn poker is?
I just play online. Like it's easy. It's from your house. And if like you like to play and you want to get better, you can just start to research like all sorts of different educational sites. There's like plenty of educational sites out there. I'm not going to show them now, but and then eventually, if you want to go even deeper, then like you can start to do some of these solvers that I talked about. Like there's software that you pay for, and then it's really just like it's just like trading in the sense that you want to make it mechanical and just like nail in your ranges and just like memorize them to the point you know exactly what to do in like XYZ situation. Same thing for trading.
Is there any standout book or resource you would want to show? Just say this is a league above the rest when it comes to learning poker.
I mean, poker's so dynamic that most stuff that gets written is like not always super relevant.
Oh, really?
Yeah, it's like the game like changes quite a bit. Although like I haven't really just like the overall. Well, okay, so I guess I'm talking more from like a higher standpoint. Like the meta in poker changes quite a bit, the meta game, and especially at the higher levels. But you know, if you're just talking like intro player, like it's all pretty much the same. I in terms of like basic good books, I can't recommend any off the top of my head. But if you just look on some of the big educational poker sites, like they're gonna have hand ranges for you to learn and stuff like that. Like that, like I would say like learning from like a good fundamental standpoint like that is a good like foundation for most people who want to learn. Like just try to learn like opening hand ranges, like what should you open in XYZ position, what should you 3-bet, or you know, et cetera, et cetera.
Just because I'm quite fascinated by this, Sherpa. Poker has, I'm sure you can calculate the mathematical probability and how you should play almost every single hand. So given that it's not like Magic the Gathering or Yu-Gi-Oh, where the new sets of cards come out and the game rules change, how is it that the meta constantly changes?
I'm more talking about like the higher stakes guys. It's just more like kind of hard to explain, because a lot of the higher stakes guys will use solvers and they'll do what the solver says, and it creates certain lines that people do often, like, you know, becomes like the standard line. And people, it's a, you know, game of rock paper scissors. Like, you know, if someone is
Right.
doing like XYZ line all the time, and that's like the standard. I mean, you understand metagame from like you know, strategy game standpoint probably. So in that regard, you know, like if you're doing XYZ line, like often, like people will try to find different ways to exploit that.
Okay, so there's potentially multiple different ways you can play each hand you get that have similar probabilities of success depending on your overarching strategy. And there's game theory involved because you have to predict what strategy the other person is using, whether you have a way to counter. Yeah, I didn't really think of that. And this is obviously with online poker because in person you're not going to have these solvers with you.
Yeah, it's more. I mean, it's more online. I mean, live. Another thing with live too is you don't play against the same people all the time, and it's that way again. Like I'm more talking about higher level. Like if you're talking about lower level poker stuff, it's like you aren't gonna have too many. I mean, you will have regulars that you play against, but like the player pools are much bigger on smaller stakes. So like you don't really have to worry about it on smaller stakes, I would say, or live. But
what a fascinating tangent, Sherpa, diving a little into the higher end poker world. Thank you for sharing that with us. Meditators, if you're listening and you've enjoyed what Sherpa has had to say, he's got a fantastic Twitter and YouTube channel. You'll find the links in the description below. Sherpa, thank you so much for joining us. Is there anything you'd like to leave our listeners with before we wrap this episode up?
I would just say if you are struggling in terms of trading or crypto, just know that if you stay in the market and if you keep working hard at whatever your edge is, you'll find success. Like just your most important thing is just to stay in the game. Like don't liquidate yourself. Don't lose it all in one trade. Don't expect to make all of your losses back in one trade either. Like I mean, it's possible, of course, but just look into a sustainable thing that you can replicate and keep doing over and over again, be it like flipping BSC shitcoins or trading or like anything else. Like there's tons of different ways to make money in crypto. I would just say just try to survive. That's like the most important thing I could say.
Survive and find your edge. Meditators, until next time. Thank you, Sherpa.
I really enjoyed talking to Sherpa and want to emphasize his point that there are so many different ways of making money in the crypto markets outside of just trading, which isn't suited to the majority of people. I couldn't agree more with the sentiment, and that's why I have my research team write 6 free market meditations newsletters a week. It covers the latest market news and keeps you up to date with all of our favorite ways of making money in crypto. To access this, all you have to do is go to 𝐏𝐸𝐺 If you want to find out more about ways of making money in crypto, make sure to check out our DeFi Masterclass, where we put together our favorite guests' highest value insights into the DeFi space.